Hello, my name is Mike Sinibaldi and welcome to this week's video edition of Heard on the Street. In this edition, we're going to take a look at the following markets: the E-mini S&P, oil, gold, and the US dollar. The first market we're going to talk about is the E-mini S&P. At the weekly chart level of the combined sessions, the market rallied to within points of a 1.382 reverse Fibonacci extension of the distance between A and B and completed a butterfly reversal sell pattern. The first region of support is 1248.40. Dropping to the daily chart level, if a tradable top is in place and my interpretation of the initial wave labeling is correct, then price should fall impulsively and break the lower boundary of the price channel. That will confirm the presence of third wave price action. My short-term target for wave 3 is where wave 3 equals a 1.618 multiple of wave 1 at 1243.50. The intermediate target of the decline should be the previous fourth wave at 1172.25. The lower 120-minute time frame shows a clear 5-wave decline from 1295 to 1267.50 labeled as wave 1. This wave was followed by a 3-wave counter-trend advance. Even if I'm dead wrong about calling a top, according to the rules and guidelines of Elliott Wave principle, price should decline in another 5-wave structure to 1260.50 as part of a 535 corrective structure. My point is that near term the trend is down regardless of whether you're bullish or bearish. The next market we're going to cover is crude oil. My current interpretation is crude working an expanded flat correction fourth wave. Support for the termination of the structure should lie between 84.725 and 85.4. Thereafter, crude should rally to complete the ending diagonal pattern that began at 67.175. While it's too soon to pinpoint the terminus of the diagonal structure, early targets point between 94.675 to 99.375. I'm setting critical support at $80.05. A print below this level would most likely mean that wave 5 had ended and sustainable decline was underway. The next market we're going to cover is gold. At the moment, gold is in a precarious position. While a case can easily be made that a top is in place, an equally bullish case can be made that the rally isn't over. At the weekly chart level, critical support of 1266.60 must hold for the bulls to remain in control of this market. If not, wave overlap would occur that would bolster the bearish case. Until that occurs, my operative count remains bullish. Note that volume has dried up, a bullish sign. Another piece of evidence that supports the overall bullish interpretation is that the momentum indicator has a well-defined trend line that should be challenged on Monday. The stochastic moving average and RSI 3-period moving average should fall along with price, but then reverse off the trend line, validating the bullish interpretation. Support for the termination of wave 4 should lie between 1290 to 1291. Should the indicator fall below the trend line, then a more bearish count must be considered. The US dollar remains a market that has been very difficult for me to get a handle on. I had been working a series of 1-2s, but the market's failure to push through the 50-period moving average after 2 failed attempts to challenge critical resistance leave me searching for answers. It's hard to make a bullish case when the dollar's decline doesn't appear to be over when comparing it to the real, the loonie, the Japanese yen, and Australian dollar. Stepping back and looking at the higher time frame shows that the market is consolidating. A triangle could be building, but even then I have issues with considering that interpretation given the decline from 121.29. Therefore, until the market structure becomes clearer, I'm not comfortable expressing a market view. I hope you found this video helpful, and best of trading.